Hey guys, what's up? Alec back with the daily stock market. Only up 50 bucks today. That's due to cryptocurrency. Obviously, what we're going to be talking about today is Sunday stock talk. So we're going to be talking about 5 to 10 different stocks to have on your watch list. So we're prepared for this upcoming week for our trading week. So make sure you like and subscribe for more daily content. Now, I put a poll out about an hour ago on my Instagram. I said, submit your best stocks here. We already got some viewers and we already got some responses too. So check it out, see what people are talking about, airline stocks, SDC, pins, and I'll actually take the most requested stocks and we'll talk about those stocks today. So it's going to be the most popular stocks that we're going to be speaking about. But just so you can actually see the responses that we got, here are some of those responses here. Okay, so the first one we're talking about today is going to be Chargepoint, down 5.4% today, up 1% on the after hours. And I should say Friday that it went down, not today. And we're even seeing the volume pretty high. You see 14 million on Chargepoint's volume. But if you go out to a 1 month chart on Chargepoint, they're down 15%, down 27% in the last 3 months. So I can honestly see a really good buying opportunity right here with Chargepoint. If we zoom out to the year, we can even see that it hits that $20.50, $20.20 support several times. You can see here, and again, you see it hitting that $20.50 support. So right now is a great time. In my opinion, I'm personally going to be loading up on a lot of Chargepoint. I'm going to be doing a heavier swing trade, and I'm also going to be doing a nice option trade, a call option on Chargepoint. Now, I think a good exit strategy if you have a large position is around $22 per share. But for me personally, I'm going to be offloading between 24 and 25 for some of my position, and then even past 30, because I think that this is a great long-term hold too. So I think $30 a share, I'll be offloading majority of my shares for Chargepoint. Next up, we have SoFi Technologies, and they're down 3%, around 3% on Friday with the after hours movements as well, down 10% in the month. But look at that, 31% loss in the last 3 months. And again, with those support and resistance, you can see SoFi actually set themselves up for a pretty strong support earlier this year around $17, and then they went to lower lows right around $15 to $14 per share. And again, they're going lower lows again, which is not a good sign for their TA. But it is a good sign because after they make those lower lows, which we saw between April and May, we saw a spike up after that to around $20 to $23 per share. Now, I think it's safe to do, wait if you want to wait till closer to $13 per share or below $13 per share. I think that's going to be the best opportunity to buy into SoFi. But I think selling, for me personally, I'm going to be selling right around $17 per share all the way to $20 per share. And if you plan on holding for long term, then I think that they can even go higher in the long term too. You can see I have 82 shares, $1,200. We're down 3%, which isn't a big deal because I plan on holding for long term anyway. You'll also see I have an option contract out for selling a put, and I'm up 34% on that one, and it expires on 9/17. So on Friday it'll expire. I'll get the money, and I'll actually make $231 or more from this, plus the $1,700 collateral. If you don't know what selling puts are, it's not the same as buying puts. It's completely opposite. I have a full option training course also and a one-on-one program if you do need a little bit more help trading options and you want to learn some techniques to make steady income. All right, the next one that a lot of people want me to talk about is Smile Direct Club, which is it's about $5 per share, so it could be attractive. I know a lot of people like the smaller, cheaper stocks. Even though the dollar amount the stock is doesn't matter, you really want to look at the market value. If you scroll down, you can actually see the market cap, which is 1.9 billion, which is 2 billion. But you honestly want to look at even the PE ratio, which obviously they don't have a PE ratio. So if they don't have a PE ratio, then in that case, you would want to look at the PS ratio, or the price to sales ratio. And that's really the best way to find a quote unquote cheap company, not by looking at the share price and saying, oh, it's under $5, it's a cheap company. It just psychologically you think it's cheap because you can own like 100 shares or 200 shares. So with that being said, we have Smile Direct Club down 4% on the day, up 1% after hours. But if we look at the 3-month chart, we can see 45% decrease. So I really want to do a deep dive on this one and see what's causing it to push down. Is it just hype that happened? Because I know it IPO'd in 2017 and just went straight down from there. It went from $20 a share all the way to $8 per share in the matter of a few months. So that probably left a lot of investors with a sour taste in their mouth. If you bought at the IPO price, you lost 60% of your value. And then after that, it shot up to $13, $14 per share, and then it shot down in the matter of a month, so a few months again. All right, down to $3.88 per share. It made a comeback and it went to around $12, $13 per share. But again, it's sitting at $5 per share. I think that this is a riskier one to hold. You definitely want to do a deep dive, see what's going on. Why is it dropping? Is it just a new company that's not profitable? Can it be profitable in the future? What's the guidance looking like? If you want to be a little bit more of a risky swing trader, I think that this one can definitely go back up to around $7, $8 and possible $10 to $12 per share for Smile Direct Club. Now, let's talk about Affirm. We didn't get it requested too much, but it got requested a few times, and I think that this is a good one to talk about and add to the video because a lot of people still don't know about it because it's a newer company. Okay, since IPO, they're up 150%. They IPO'd early this year, at the start of this year in January, so they've been around for almost 9 months now, and what we can see is they fluctuate very rapidly. So they IPO'd at 49, and they shot straight up to 136, went down to $50 per share, and then they had news that they partnered with Amazon. Affirm stock surges 20% after earnings beat and positive outlook. So they surged 20%. They had killer earnings, even though they are still negative. They're not even bringing in a profit, and their EPS actually came in lower than expected. That's what that one article says, but honestly, they skyrocketed 20% because of the news with the partnership with Amazon. It's like an afterpay for Amazon, so that's actually going to be huge for Amazon. And if we look at the 1-month chart, they're up 79%. So what I want to say about this stock is you can see that it shoots up off hype, which is exactly what happened again with the partnership with Amazon. A lot of people are FOMOing, and it's a hype stock right now, and it shoots up, shoots up, shoots up. So I personally think that this one can go below $100 again. I think I'm not going to be at least buying till around $75 per share, but even $80, $90 per share might be a little bit attractive for me with Affirm. So here you'll see Affirm CEO Max Levchin explains how the company handled negotiations with Amazon on buy now, pay later deal. Max on Thursday addressed the company's blockbuster partnership with Amazon. He told, and so you can see he announced it Thursday, and that's typically when you saw the spike happen with Affirm, was Thursday and then Friday also. For the last one, let's talk about Tesla, down almost 3% on the day, down to $732. The EV vehicle industry, electric vehicle industry as a whole, I definitely want to make a full video later this week, and we'll compare, XPEV, Lee, Tesla, Lucid, NIO. We can compare all those stocks against each other, and we can see what's going on and do a full analysis on the EV industry as well. So leave a thumbs up if you want to see that and comment below. Tesla's up to $732, up 3.6% on the month, up 20% in the last 3 months. So Tesla's on a little bit of a kick. Michael Burry, actually, remember, he betted against Tesla. He took out some puts about a month ago on Tesla. So he's probably down on those puts. Kathy Woods was correct. Obviously, we actually saw her offload some shares of Tesla out of her fund. So that might be something that you want to look a little bit more into. Is Cathie Wood sold some of her Tesla shares, obviously because she had a 19% uptick on the last 3 months, and she's probably just minimizing her risk a little bit because they have Tesla. I'm pretty sure, I'm like 80% sure that's their biggest holding is Tesla. So it's never a bad idea to skim down some profits, especially if you're up on your biggest holding in your portfolio. So you should always know your largest holdings in your portfolio, your highest portfolio diversity stock. And for Cathie Woods, that's Tesla. She's up on it, so it could be a good idea to take some profits. All right, they're up 91% in the last year, and Cathie's been holding for at least 2-3 years from what I know. So what should we do with Tesla? So that's the question, right? Now, I always say below $600. So let me rephrase that. So below $800, I think is a great place to buy if you're a long-term investor, if you plan on holding for 2 years to 3 years or 5 years. All right. Now, if you're a shorter-term investor and you're looking to make some money, I would try to buy closer to $600 or below $600 to make some good profits. Because if you buy around $600, which I personally like to do, and then I typically like to sell it right around $800 per share that way, if as a swing trade. Now I have a lot of Tesla that I'm holding for long term in my Roth IRA, in my retirement funds, in my long-term portfolio accounts, because I personally think that Tesla will be the 3rd to 5th biggest company in the world. You know, it's going to pass every other company except for like Amazon and Apple in the next 5 to 10 years. And I'm definitely planning on holding some Tesla in my accounts for 5 to 10 years. So I am loading up on Tesla under $800 for my long-term portfolio. All right, guys, so I hope you did really enjoy that video. Smash the thumbs up button because it really does help me out. And leave a comment below what you want to see on the next video. If you need a little bit more help in the stock market and you're a beginner trader and you want to figure out how to get some profile gains like I've been having, go ahead and reach out to me on the Instagram DMs in the direct message, and I'll be more than happy to help you out, let you know exactly what I've been doing and the skills and strategies that I've put in place to become a professional trader. Now, as you can see, I have 45% gain on my Robinhood account in the last year. My Webull account has a 96% gain, so that's amazing. And then also my Coinbase account has a nice gain on it too, around a 90% gain. So if you need cryptocurrency help as well, make sure you follow my second page, the daily cryptocurrency, so you can actually get all your information that you need on cryptocurrency. And if you're more of a cryptocurrency investor, I have a close friends list that shows you my weekly trades in the stock market. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.